Talk about the segment of the day, and those are the Gujarat PSU stocks surging in trade after the state of Gujarat has announced a new policy for minimum dividend distribution and for issuer bonus shares. Sonal is here with the details and the stocks which benefit from these developments. Sonal.
Thank you so much for that. A big move is what we have seen across these stocks today in trade. That is because the government of Gujarat, they've changed their dividend allocation policy or ways to reward the shareholders of these companies as well. In their policy note, they say that in terms of dividend, the company should be paying 30% of PAT or 5% of net worth, whichever is higher, to the shareholders. And in terms of the buyback, a PSU which has at least net worth of 2,000 crore rupees and cash and bank balance of 1,000 crore rupees should go ahead and issue and announce a buyback as well. For bonus shares, the surplus and reserves, if it's equal to or more than 10 times of the paid up share capital, and they can do a share split if the market price or book value exceeds 50 times of its value currently that they are stating as well. There's 7 of them. All of them are up and buzzing in trade on the back of an expectation that maybe, yes, now the shareholders will be rewarded at a higher level. Now, I just took a look at all the financials of the companies as well as to whether they do qualify for this or not. And there was an interesting take that GNFC is the one which can actually do all the things that the Gujarat government stated in its policy document. They have a cash of around 1181 crore rupees. They have profits of 1704 crore rupees, and they have a net worth of around 7991 crore rupees. So they will be able to meet all the criteria that is set by the government without taking any stress on their balance sheet as well. For Gujarat Gas, while they do have a good net worth, enough profitability as well, the cash balance in the book is a problem because these numbers, of course, are as of FY22. Things will change in FY23 and the next year as well. But in FY22, Gujarat Gas had lower cash. For GSFC, they have cash of around 315 crore rupees. So they will be able to pay out around 5% of the net worth, which is 600 crore rupees, or 30% of PAT, which is 300 crore rupees again. But again, important note, GSFC is also rallying because it holds stake in a lot of these listed companies from the Gujarat government. Gujarat Alkalis and Chemicals has a cash balance of 300 crore rupees. That is also surging in trade. GMDC2 has a higher cash balance as on FY22, 1,200 crore rupees here. So the company, as per the rule, can also go ahead and do a buyback. So that is working well for GMDC. GSPL is the other one which has a lower cash in FY22 at 562 crore rupees. But with the higher tariffs that will kick in from FY24, they expect cash levels to go higher. So of course, the change in the balance sheet in FY23 and FY24 will impact their ability to give out dividend and issue buybacks as well. Just for reference, their dividend payout for all these companies has been to the tune of 9% for GNFC to as high as 34% for GMDC as well. So overall, yes, it's important to note that these numbers will change in FY23 and FY24. Basis current numbers, GNFC is in a better position to actually align with all these policies that the Gujarat government has put out. And also, a lot of them have capex coming ahead as well. So how will they allocate their cash balances is something that we'll be watching out for.
Oh, yes, absolutely. Thanks very much for all that perspective and the numbers. That data is quite helpful, Sonal. Let's